Healthcare is one of those sectors that tends to be pretty reliable even in challenging markets. Broadly speaking, healthcare is ripe for ESG investing because it offers attractive historical returns and in many cases produces solutions for social good. These days, the healthcare industry is going through a major transformation. Many expect to see a boom or at least a gradual increase in investing in this industry. So, what are the key drivers and opportunities investors should consider? Here to help us find some answers is Sanjiv Talwar, Senior Healthcare Analyst and Portfolio Manager at Invesco, and John Divine, Senior Investing Reporter at U.S. News and World Report. Thank you both for joining us.
Thank you for having me.
Thank you for having me.
So Sanjiv, let's start first talking about healthcare's performance during the market's bumpy road during the first quarter and now at the end of the second quarter. Shed some light on the sector's performance. What's going on there?
Yeah, good grief. Well, to state the obvious, the stock market has been incredibly volatile. I think since the market bottomed probably around March 23rd, healthcare has all but recovered. And it's somewhat in line with the broader market, I think, for the year. But I will say there's a very large difference in the performance in different pockets of healthcare over the year. And this variability has been, I think, directly driven by the COVID crisis. Different pockets of healthcare have been affected very differently. For example, sort of the two critical pockets that have outperformed, maybe those associated with telehealth and then biotech. And then probably the worst performing has been sort of med device companies that specialize in elective procedures, for example, joint replacements.
So if you're talking about these new technologies that are emerging, telehealth being one of those, with this, what sort of returns could investors expect to see in the second half of 2020, especially in light of those new technologies emerging?
Yeah, I think for one, sort of near term and then sort of future returns will depend in large part on the trajectory, the length and depth of the COVID crisis. As a base case, I'd expect at least the pandemic to continue, perhaps even become endemic, at least until there's a vaccine, early next year. So that, I think, is my base case that would inform investments.
Yeah, and I would just say, this is John here, that in telehealth, there's really only one major player that's publicly traded that I know of, and Sanjiv may know of more, but Teladoc is sort of the big player here. The president has mentioned telehealth in a White House address, sort of emphasizing that as an area that needed more focus, that was going to be helpful during this crisis. Medicare has begun to cover that. And I think that, competitors will come into this area, but telehealth has a good start there, Teladoc does. And I know, friends and family that have already used that service to visit with doctors remotely, and they even do counseling services and stuff like that. So I think that's a really helpful area that is going to be here for the long term, and that's really the company to watch, in my opinion.
And so, John, just in terms of variables that might be able to dampen that, you mentioned clearly that this is the wave of not even the future, it's happening now. What are you hearing in terms of issues that could be problematic, or either situations that could change the trajectory of what seems to be an upward trend for telehealth?
Yeah, I think that there are some things that, and again, I'm not a doctor, so, let's clarify that. But, there are some issues that really may not be well suited for telehealth. And, obviously, if there are chronic illnesses or issues that you actually have to get checked out in person to see what the options are for you, there are limitations there, but I think that that really the psychology of, the average person is going to skew more towards being conservative in the future. And, maybe if it's not one of those areas, that they'd be more inclined to do telehealth. So it does have limitations, but I don't see this slowing down as a long-term trend.
Okay, great. In terms of looking at the broader picture of sustainability for investors who are interested in impact investing and sustainable investing, do you see, Sanjiv, that there are certain trends that those ESG investors need to think about as it relates to the healthcare industry? And if so, what are they?
Yeah, let me just actually then echo a little bit sort of what John said. Certainly, I think maybe I'll highlight just 2 or 3 of them. The first one is, as sort of mentioned, telehealth, and I think we are seeing a structural shift in behavior by patients and physicians to adopt sort of telehealth in all its forms. And this will likely stick to that, at least in my view, and lead to some profound and long-term shifts in healthcare delivery. The second area that I'm sort of intrigued by is biotech. This is a pocket that has been depressed for a good 5 years. I think starting when Hillary tweeted about drug pricing in 2015. But sort of the outlook has changed for them to me. Most obviously, it's sort of all about innovation, and this is most evident in how biotech is solving, or at least playing a role in solving the COVID crisis. Starting with the antivirals and coming up maybe the next month or 2, antibodies and vaccines. And certainly the political rhetoric around drug pricing has sort of died out, and so much increasing sentiment around pricing. And of course, historically low valuations. And another sort of theme in the longer term might be biotech being a beneficiary of U.S.-China tech sort of rivalry. So I think, and maybe there's a third one I'd like to add, oftentimes overlooked, but it's biological manufacturing, right? This notion of vaccines and biologics, there's going to be a massive bump in sort of demand for these sort of things, simply because we don't have enough vaccine or even, in fact, antibody manufacture to go around probably for the next year or 2. So those are the sort of 3 areas, even in terms of ESG, I'd like to highlight.
If we look at M&A possibilities, so if we look at the larger biotech firms versus the smaller ones, do you see anything percolating there in terms of how that might impact expectations around biotech performance in general?
Yeah, no, that's a good point. I think we have started to see sort of towards the latter half of last year, a clear pickup in activity, at least in my view, at these depressed valuations. The amount of innovation that some of the small and mid-cap companies, own, and the amount of cash sitting in large biopharma companies, I don't think it's ever been as high. And so I think there's a willingness now to put that money to work. And personally, I would see sort of the next maybe 3 to even 4 years, a lot of consolidation. I think there's a lot of duplicate R&D and medicines in the space in the pipeline. So that needs to sort of come in a little bit. And so no time like sort of near future.
So if we do a rapid response, question for you. So if we wanted to look at top 5, top 3 stocks in this area and just giving some additional context around them and why it might be good for investors to at least start thinking about those top 3 or top 5, how would you approach that? And I'd love for that to go to both of you. How would you look at the top 3 or the top 5 stocks in this area in terms of good ones to think about at this point?
Yes, well, sort of to piggyback on something that Sanjiv just mentioned with the M&A aspect and biotech. One thing just to say before getting into any specific names is that investors should realize that oftentimes biotech is it can be with the smaller names, especially sort of a binary outcome. It can be either they get acquired for a huge multiple of their current price or for a huge premium, or they don't have any revenue at the moment, and everything is riding on something that's about to come out. And if it doesn't, the clinical data isn't good, then it doesn't turn out well. But with that said, I think that there are. So I would just say that you need to know your risk profile first. I think that on the lower risk side of things, you have sort of companies that like a Becton Dickinson. Actually, it's a dividend aristocrat. It's multi-billion-dollar company. It's going to be fine sort of no matter what happens. But it makes vials, for instance, which will, pretty much doubtlessly be used to roll out, whenever we get a vaccine. Then you have sort of higher risk names that may have a lot to gain, like a Moderna, which is working on a vaccine. I mean, there's a lot of companies working on vaccines now. I think there's over 100 globally. But I think that sort of getting back to the ESG focus, that some lower risk names that will be needed regardless of who comes up with what, or who the really home run winner is retail pharmacies like CVS and Walgreens. I think that they're going to be crucial for distributing and administering the vaccine when that day comes. So those are just a few names, and I'm sure Sanjiv has some other interesting ideas.
Well, absolutely. So, let me sort of try and tackle that M&A question, right? And it's one that I get very often. It does come with a warning. These sort of companies, mid-cap, sort of biotech, are extremely volatile. But I would think sort of any company with a really good platform or late-stage clinical asset is likely in play. If I were to offhand sort of pick a two or three in that sort of size area that just scientifically I find very interesting, company like, and these may be sort of relatively not known too well, Decipher comes to mind. Late-stage cancer asset that's sort of looking pretty good. Unicure, which is a gene therapy company, just an extraordinary platform in my view. And then a couple of sort of smaller mid-cap companies that are working on really good science. One of them is Principia, and one of them is Arena. So that's sort of, if I would just think off the top of the head, some of the science that occurs to me offhand.
So one thing that I do want to talk about when you're mentioning these or any stock, particularly in this area, there could possibly be reputational risk. So what types of negative news or reputational risks might we hear about in the media, whether it's now or whether if we're thinking about possible scenarios? What could possibly turn the trajectory of these stocks around based on, findings, negative news, and reputational risk that could really play a role in investors' considerations?
I think that's a great question. I think there's one issue off the top that I would just mention, and I'll pass the ball back. But I think it's the issue in testing in the early phases of this has been that there's been a number of companies that have come out with claims that they couldn't really back up about the accuracy of their tests, or what it meant for the future. If you got a positive test, and does that really mean that you're, is that any actionable information, and how reliable is that? So that I think regulators I've seen have cracked down on that a bit, but in the early goings, I think there was arguably some fraud in that area, and so it's just really important when it comes to testing to sort of vet those companies and make sure they're not shady, I would say.
Yeah, I can add to that a couple of things, and especially coming back to this sort of biotech theme. Obviously, I think drug pricing is sort of foremost. For good reason, the sort of industry has been pilloried with the vaccines out and sort of, Gilead's antiviral that seems to work pretty well. there's got to be some caution around how these things are priced, especially in the face of a sort of global pandemic. I think that's going to sort of be one area of focus, and everybody's going to be looking at it. To me, at least, the biopharma sector will just do themselves a favor, by sort of pricing appropriately, let me say, in this space.
Great. So if we were to look at and take that view more holistically and have a rapid fire top thing that may catch us by surprise, if we look back at 2021 and say, wow, how did we miss that? What would that thing be that particularly institutional investors may not be factoring in at this point? What would you say, and maybe one of the factors that you just mentioned would fall into that category, but what would you say would be the top surprise area that institutional investors should at least think about now so they won't be totally taken aback and surprised?
Yeah, that's a tough one. We spoke about quite a few things. I'll go back to, just because of the COVID crisis, there's probably still not enough certainty whether some of the vaccines will work. I think, while prediction is always hazardous, but I think we can be sort of quite optimistic just given the biology of the virus that some of these will come through. There's still considerable doubt, even in the face of some elevated sort of valuation. And the other, might be this sort of, when you have this plethora of treatments, how do you get it to, 8 billion people around the world? And that is sort of the manufacturing, who supplies it? I don't think people are paying enough attention to it. That's sort of a very, very critical area because we just don't have enough bandwidth and resources to go around. And so that is another thing I think could come out of that field.
Yeah, and I guess on my end, and this doesn't, to be clear, directly relate to, coronavirus, but I think that a little bit longer term, that gene editing is going to be a much, much bigger area of focus, not only, in healthcare itself, but for investors. And there are some public companies out there, like CRISPR Therapeutics and Editas, I guess Editas. I'm not exactly sure how to pronounce that, but
and while we're thinking about pronouncing that, could you give us some background on gene editing? I know there's some folks that likely will be a new concept. Could you explain what that is?
Yeah, so I mean, I haven't gotten my doctorate in it myself or anything, so again, I must clarify that. But it's basically a way to go in and edit DNA to eliminate certain vulnerabilities, or can actually potentially be used to sort of remove the DNA that would cause a disease. And so it's being used right now. Some of the early tests that are going on are there's a sickle cell candidate out there that's in early testing. One of the companies is looking at childhood blindness. And obviously on a larger scale, the big diseases and issues like cancer could eventually be addressed, but it's in the very early stages, and there are some moral concerns because the big, just to be frank about it, the big concern is like custom gene editing babies. If you want to have a certain baby with certain characteristics, that there are obviously huge concerns there. So like I said, very early stages, but it's a very high potential area.
Well, these are some fascinating insights that I know will definitely resonate with our institutional investor audience, but some of them I have a feeling will be new to them. So we appreciate your insight and your thoughts here. Sanjiv, John, thank you so much for joining.
Thanks very much.
Thank you again for having us. Thank you.
We invite you to subscribe to the Refinitiv Sustainability Perspectives podcast on iTunes, Spotify, or wherever you stream your content. What did you think about the podcast? Leave us a review on iTunes or follow us on LinkedIn and Twitter for updates on our show. You can even check us out on YouTube now. Thank you for joining. See you next time.